I'm Tianwei and welcome to World Insight. The IMF has raised the weighting of the Chinese yuan in the special drawing rights or SDR currency basket. In its recent SDR review, the lender raised the yuan's weighting to 12.28% from 10.92%, while the US dollar's weighting is up by 1.65 percentage points. The other three currencies in the basket, the euro, the Japanese yen, and British pound, had their weightings reduced. The IMF's decision to raise the yuan's SDR weight is the milestone in the currency's internationalization, the result of China's financial opening up. For deeper insights, let's loop in our panelists. For more on IMF's lifting weighting on Chinese yuan in SDR basket, we are joined now in New York by Anthony Chen, who is a former JP Morgan Chase chief economist. In Beijing, Xu Qiang, assistant director from the International Monetary Institute from Renmin University of China. Gentlemen, what a pleasure. Thank you for joining us. Now, to you, Professor Xu, tell me more about what do you make of this latest move?
I think this change in the share of the SDR actually reflected what's the situation of the world is going on today. You'll be seeing that the Chinese yuan has been raising its share in the basket of the currencies. It shows that Chinese currency has been using more and more in the international trade and financial market. And especially it shows up the Chinese yuan has improved its handiness into international settlement. And also because it has a rather stable value. And so its foreign exchange rate is rather stable. So I think more countries started to trust Chinese yuan and started to use more. Especially a lot of countries are facing very hard choices. For example, right now the world is more and more split into different opinions. So there's no gray zones. For example, some country, if you are not friends with one team of countries, so you probably will lose it all of your profit in that country. So for a lot of countries in the middle ground, they probably want to diversify their portfolio in the trade and financial investment.
Well, we've got to remember that the decision of the IMF, it's a 5-year decision. It's been 5 years through 2021, and there is no secret that the Chinese economy has evolved in a positive direction. It's gotten much bigger, more integrated with the global economy. The decision was delayed, of course, by 1 year because of the pandemic, but it is a multi-year process that takes place every 5 years. And of course, in this process, the US economy also raised its weight. You also had the Japanese and the Euro zone lowering their weight. So it's really a reflection of reality. The increased weight is certainly justified. What the next 5 or 10 years will bring, of course, there is uncertainty. My hope and expectation is always that we can get around those conflicts and move towards greater cooperation.
About the reality, there seems to be some kinds of financial wars going on. How important it is, do you think the world has realized to diversify the currency?
The expectation was that because of this conflict that of these sanctions, that somehow the value of the US dollar was going to weaken. It did not. In fact, the safety haven effect caused the US dollar to get much stronger. So I agree with you entirely that there's a need for diversification. But when you look at what's happened to the value of the dollar, certainly over the last couple of months, it has surprised some foreign exchange experts that thought that because of the sanctions that many countries would move away from the US dollar. In reality, what's happening is that we probably will see that countries all over the world will move to diversify, but at the same time will acknowledge the fact that both the Chinese and the US economies are big powerhouses, cannot be completely ignored, even though diversification is definitely the prudent policy for any country to pursue.
What does it say to the Chinese policymakers in terms of yuan's future?
Well, for yuan's future, I think China has actually a very valuable thing here in the current background, that is the predictability and certainty. So Chinese government is having a very consistent policies, liberalize the capital account of Chinese yuan, to embrace the world more and more, even though we still stress and underline the sovereignty of the finance of itself. And also, Chinese yuan have a very, very stable value anchor. So I'm thinking Chinese yuan is going to go value up in the long term, despite its volatility in the recent background. I do believe that China is going to have a bigger share in SDR, and I'm very confident about that.
Let me also ask you, Mr. Chen, about that. How do you, under the uncertainties, looking at the future of US dollar and also the future of RMB?
Well, I think that when you look at how much trade China is conducting with countries all over the world, the Belts and Roads Initiative, for example, China has a goal to actually open its economy even more and trade with more countries out there. And that is one of the features that the IMF looks at. And I think nobody will argue that over the last 5 years, the trade situation for China has dramatically improved. Now, in 2022, they've had some issues with some weakness in the economy. We saw the industrial production, the retail sales, but those are short-term trends. Over the next 5 to 10 years, the Chinese economy will get stronger, will integrate its trade with other countries in a way that will impress the rest of the world. And so I agree with Professor Xu that we will, in fact, see that the weights of the renminbi will continue to go up over time because the Chinese economy will continue to become more important in the global landscape. That is something that no one should deny and no one should ignore reality. That is going to happen.
But of course, there is the reality that the Chinese economy did slow down over the past months, and particularly due to the pandemic situation. Meanwhile, there is an enormous kind of uncertainty for our economies around the world. All of these questions, how is this, in a way, encouraging all of us to look at the news of special drawing rights and also think twice about the realities of the world, Professor Xu?
Well, yes, China do have some difficulty right now fighting against the COVID. But I do think this kind of turbulence is hitting an end. Shanghai is going to be fully liberalized against COVID in the mid of the June, so very soon of that. And Beijing have a very stable situation of the new cases, and the rest of the country is basically returning to the normal situation. So it shows up that we have a capability to mobilize people to just return the order of our production. So it should give us a vote of confidence for sure. And more importantly, as we said, from the angle of SDR, it shows another story, not only inside of China, but outside China. Because you have to understand, SDR is not purely representing the world trade in the private sector, but more they are the change of the share of the government debt between the governments. For example, one government needs to pay your debt. If you don't have enough foreign reserve, then you can pay with SDR. It shows up more of the government. Well, they need to choose. US dollar, euro for sure is a traditional payment tools. But right now, more people and more government feel uncertain. For example, how about a country in Venezuela and in some other middle regions? So they think, well, probably I should have Chinese yuan in my pocket as another option, given maybe something is going to happen.
There are evolving changes that is going on right now. It's very hard to reach a conclusion yet, as you said. Mr. Chen, though, this also about increasing the SDR for China yuan, it's also an encouragement for further opening up of the financial market and also further opening up of China at this critical moment.
Yes, it is. And in fact, right after the announcement, you did hear government officials in China basically saying that they are committed to opening up the markets to other countries, committed to continue to grow their global trade with other countries, and certainly committed to perhaps allowing the Chinese currency to trade more freely As we know right now, the trade is becoming freer, but it is not a freely floating currency. But I suspect that the Chinese government, the PBOC, will be moving in that direction over the next 5 to 10 years to make the currency more exchanged based on trends and fluctuations in financial markets.
Mr. Chan, geopolitics becoming this disruptive factor in the evolving of our economic realities. How do you see and read these possibilities?
What I like to focus on is, where are we going to be in the next 10 years? So I am not at all discouraged by these geopolitical factors that are inhibiting cooperation today. And I asked the question, where would you like to be in 5 or 10 years? And I think both China and the United States would like to be at a better place. So I always continue to remain confident that over time, these short-term geopolitical distractions will not in any way stand in front of progress. So yes, today there are real big challenges, and people say, well, if there's big challenges today, does that mean there'll be big challenges 5 years or 10 years from now? And I say no. I think that those challenges will melt away when both countries realize that progress can only be made with cooperation.
Anthony Chen, Qu Qiang, thank you so much, gentlemen, for joining us. Really appreciate it.